forget to put your city and state in the chat so everybody can know where you're coming from. We are going to get started in a couple of minutes, just getting things set up. Don't forget to put your city and state in the chat. If you want to buy your first home, you are in the right place. Good evening to my panelists tonight. Special session here that we have going on. Okay, there we go. All right. How's everybody doing this evening?
Good, and yourself?
Doing good, thank you. Doing good.
It's Wednesday, middle of the week.
Yes, yes, it is.
I'm winding down over here.
Okay, well, let's jump right into it. Let me just look again here. Everybody in YouTube, as you all are coming in, don't forget to thumbs up the video. Thumbs up the video, everybody in YouTube. Okay, so welcome to the 10K Project. We are the largest community of investors who actively fund Black-owned businesses. Tonight's session, though, is all, we focus on not just funding Black-owned businesses, but also making sure that you and your family can have a legacy, generational wealth. One of the things that was a big topic in the last presidential election was reparations, right? The average white family is worth $175,000. That was as of a year and a half ago. Average Black family is worth $17,000. I was saying, if you got a paid off house, even if it takes you 30 years, paid off house will put you on par with a white family. So tonight's session is all about, if you have a dream of owning your home, being able to do that, and not just looking at the process of purchasing a home, but also I'm fascinated with the NACA program. And we have two people here who actually successfully went through the NACA program. And then Kevin is here because I heard him talk about the Chenoa program, which is another down payment assistance program. And we have Honey Abrams here, who is our realtor, here to talk with us tonight from the realtor point of view. So again, I want to welcome all of you here this evening. I'd love to start off with just a brief introduction and tell the audience one thing. Hold on, let me hit record on this to the cloud here too. All right. Tell the audience one thing that you think people should know as they're beginning the home buying process. I'm going to start with our realtor, Honey, and you're on mute. So.
All right. So the one thing, okay. So how about one sentence? I'm going to say prayer, meditation, therapy, and staying up on your medication. That's first.
And tell everybody a little bit about yourself. You are a realtor.
Yes, yes.
How'd you get into that?
Oh, man. It's been 22 years now, 20 years actively selling real estate. I can't say all of it's been full time. You know, education and revenue would require it to be a side hustle sometimes. But for the most part, I've been doing it full time for well over 20 years. And I find that the most rewarding part of it is being able to help people's dreams come true every day.
Great. Another question for you before you go. Tell us a little bit about like how many people you've helped, or you know, some of the crazy scenarios that you've helped people through. Out of curiosity about that.
Wow, crazy scenarios.
Or most unique or most common that
2000,
people would be
so
concerned
So I'm going to say 2008, 2009, 2010, helping people sell homes that were way, way, way underwater.
Yeah.
Probably been the craziest. So, well, COVID, I don't know. It just, you know,
It's a roller coaster. Yeah, it's one thing or another. Okay, well, we're going to come back to you. I'm going to bring up our mortgage broker, Kevin here. So, Kevin, tell everyone a little bit about yourself and like one thing that they should think of as they're beginning this journey of buying their first home.
Cool. Well, I'm Kevin Jefferson with Summit Funding. I am a mortgage professional, been in real estate for 17, going on 18 years. First portion of my career, I was actually a realtor. My family and I moved to Georgia and I reinvented myself. The biggest thing that I tell buyers, listen to your realtor and your lender. Don't worry about your friends because their transaction is different. They're not going to tell you everything. They may have gotten a gift. You know, I tell people, listen to your friend's success, but don't listen to them because your situation is going to be different. I've closed thousands of loans, whether as an agent, listing agent, and lender, and I have not had two transactions not even the same transaction for the person who redid it. So just listen to your agent and listen to your lender or program director, whatever you're doing, the person from NACA. We're going to guide you in the right direction. And don't listen to YouTube either because they don't tell you everything. And I'm on YouTube. So,
well, I will say this, as somebody who is a homeowner, it is one of those things where you have to go with the flow. So when Honey said your medication and your meditation, you will need both of those things. It will be, fortunately ours wasn't so bad, but I've heard the horror stories with the paperwork and, there's a fair amount of paperwork that you have to provide. Absolutely. But we only had to go back and forth a couple of times with ours. But Kevin, talk to everybody a little bit about some of the horror stories that we hear with, going back and forth with paperwork and credit and things like that kind of get people very nervous in the beginning of thinking about this. And part of the reason why so many people feel like they can't do it.
Right. Horror story just happened to me yesterday. True story. Pre-approved the buyer back in December. Didn't, pre-approve them, went through numbers, let them know how much he qualified for. He and his wife had been looking for a house. More so after the beginning of the new year, they got a little bit more serious. She's texting me every day. Hey, Kevin, we're putting an offer in. Hey, Kevin, put an offer in. This is getting frustrating. Can we go to a different state? And just, texting me, and I'm encouraging her, hey, keep fighting the fight. Nationwide shortage. You're going to get it. It's going to be yours. Whatever one's for you, somebody's going to take it. Somebody's going to take it. Send me a text. We're under contract. Cool. Congratulations. Call the agent. He sends me the contract. Call the buyer just to get some updated information. Send it off to my setup team. And actually my loan partner who, makes sure everything is still, viable. Credit had expired, full credit.
Did they buy a car?
Yes.
Oh, that was one of the things on my list. It's like one of the cardinal sins.
Yes.
So tell everybody about the purchasing of a car.
So 9 times out of 10, you can get the house. You can get the car after you get the house, but in reverse, it typically doesn't work. Unless you got a substantial raise on your job. What I mean by that is when we look at purchases, what does Honey bring in on a monthly basis and what goes out on a monthly basis from Honey? We don't care if the car is $50,000 and has a $900 payment or $400 payment. We'll count that payment. We don't care about the end part, how much is owed. because interest rates are different for people, right?
Yeah.
But when car dealers look at you, they are more so concerned with selling you that car.
Mm-hmm.
They could probably care less whether you can get the house, because that's not the world they live in. Because a person cannot have a house and rent, or have a house and they can still get a car, but they don't see it in a reverse, right? So depending on who you're working with, they may tell you, oh, you'll be okay. And you take that for a grain of salt because you're trusting in a person and you're divulging financial information.
Mm-hmm.
So for this particular client, he had 2 debts, 2 small credit cards. So we, in this market, we've got to max out people's buying potential because it's just highly competitive. And, you're going up against cash buyers and people who are putting down a lot more than you. However, he added a $650 payment to his credit, which now you no longer qualify for X amount of dollars, because now that $650 takes up $650 of housing expense that he or she could have used because they added it to their debt. If he had it in the beginning, before he was pre-approved, that would have been calculated into his debt to income ratio, and you'll hear me refer to it as DTI. And then his pre-approval would have been a different amount. Right. But now that he added it after he got pre-approved, he can no longer qualify for the house he's under contract for. Now, in doing that, have a conversation with your lender. Hey, listen, I really need a car. What can I do? Can I qualify for the same amount of house for that, or do I need to hold off? And 9 times out of 10, I'm going to tell you to hold off, because it's just not going to work. They don't even care that you pay on time or never been late.
What if you lease the car versus owning it?
Same difference. They're going to count the payment.
I wanted you to respond to that, because somebody may say, oh, I don't own the car, I lease it.
Yeah, same. You're going to, it's the same difference. It's a payment that's going to be counted into the debt to income ratio. If he had called me, I would have troubleshot with him and told him what to do. His wife was not on the loan. Get the car in her name. Mm-hmm. The rate might be a little higher if she doesn't have the credit because she works, but now we don't know. Like, now we have to scramble and figure out, can she go on the loan, do the application, or do you get out of the deal before you lose your earnest money, which they've already put down and turned in the check? Mm-hmm. That was probably it was a horror story, but it was so typical. Disappointing because it's not like we weren't communicating. And you told me everything else that was going on. I got my tax check. Can I put it in this account? Can we take money out of this account, put in this account? Like everything but you purchased a car. And when I asked him, he said he thought he told me. And I said, I'm 100% sure you didn't, because I know that it wouldn't have worked.
Right.
So now we just have to figure that out. He qualifies for something, but not for the same amount. So that was my horror story of the week.
Yeah. But that is when I started doing my research about buying houses. That was like the thing that every loan officer said in every video, every loan officer that I spoke with. They're like, do not buy a car, do not buy a car, do not buy a car. Even your student loans can be a little bit more flexible for those of us who have higher student loan debt than a car. This is my understanding. So one of the programs that's available for down payment assistance is the NACA program, and I'm fascinated by this program. I watched a lot of different videos. I reached out to a few people, and we have 2 people who actually successfully went through the program here tonight to answer your questions from a homeowner point of view. Kevin knows about it from the loan officer's point of view, but I really wanted you to get the view from somebody who actually went through the process. So the first person is Cece. She is here. Hello, Cece.
Hi, everyone.
So why don't you tell everybody a little bit about yourself and how you got involved with the NACA program?
Yeah, my name is Cece. I am a finance professional in New York City. I first heard about NACA in 2014. My cousin actually told me about the program, and I said, that sounds a little bit too good to be true. And I kind of like brushed it off. 2020, my girlfriend says, hey, let's go to this workshop. I go to the workshop. It's a NACA workshop. And they start talking about all of the benefits and so on. And I'm like, wow, it sounds like a really good program. So long story short, I went ahead and I applied. I watched a lot of videos, including Natosha. I've seen a lot of your videos on YouTube, and that was one of the things that I would say is good advice for people that are going through the NACA program. Watch a lot of videos, because there were a lot of things that I was prepared for as far as like getting my paperwork in order from watching YouTubers like Natosha and some others that also went through the program. And I was able to close on my house in about 6 months. So I was really excited, because I did have that preparation ahead of time from watching others who went through the program.
All right. So does NACA give you like your entire down payment, or what is NACA and how does the money work?
So NACA does full financing. They don't actually give you like your down payment money. They do something that's called full financing. So what happens is you have to give the seller some sort of money, your earnest money that Kevin spoke about, to take the house off of the market. And then at closing, you get those funds back, minus like, your first month's mortgage and your taxes and insurance your first year. And the deposit that you gave the seller, you will get that back at the closing table, and they just add it on to your mortgage. So let's just give an example with numbers. If the house cost $100,000 and you gave the seller $10,000 to take the house off the market, when you go to closing, you'll get back the majority of that then $10,000, and your mortgage amount will be for $100K pretty much.
Which I mean is a blessing, because then you're able to, if anybody's bought a house before and you've never owned one, like you have to buy garbage cans, you have to buy like all sorts of stuff for the house. So, it's a blessing to be able to have that money back in order to either save it up for, getting ahead of mortgage payments, or being able to buy some of those other things in order to decorate the house. What's one thing that people should know or keep in mind with regards to the NACA process from your point of view?
It takes time. A lot of people think that they're going to just come into, the program and, be able to close on their house in 30 days or 60 days or something like that. But it does take time. NACA is not like your traditional lender where, it's okay, you come into the bank, you get pre-approved and you start house shopping. NACA wants to see, because they're not looking at like things on such a granular level as like your credit and so on. NACA is looking at other things to qualify you. So it does take a longer time to get all of your paperwork together and get you approved to buy that home. So I would just say to just be patient, because it does take a little bit of time. And if you have all of your paperwork together, you can get through the program, much quicker. For me, it was 6 months, which is relatively short, for someone going through NACA. Yeah. And that also accounts for like wait time between appointments, right? I went to my workshop in February. I had my first appointment in May. So I'm also counting that time in the process. So it was actually much shorter than that, but I'm also counting just that wait time for an appointment.
Okay. And the final question I have either for you or Kevin is, I forgot. Yes. Now I remember. Income, minimum income, maximum income. I don't know who's the best person to answer that.
I can talk a little bit about myself on that one. So NACA helps anyone, pretty much anyone is able to qualify, if you meet the requirements and you follow the steps that NACA outlines for you. There are, priority zones. They make you either a priority client or a non-priority client based on your income. It's been a little over a year, almost 2 years since I've done it. So I can't tell you what those figures are offhand. So maybe Kevin might be best on that part, but there are, different areas where you can purchase based on your income. And in theory, the higher your income, you end up having to purchase in, the more impoverished areas to kind of like bring up the value of those neighborhoods, which I think is great. A great thing that the program is doing because it helps build up those underdeveloped neighborhoods.
Great. Tasha, hi.
Hi, everyone.
So introduce yourself and then tell us like one thing we should know about from your point of view with regards to the NACA program.
Hi, everyone. My name is Natosha. I currently live in Georgia, Atlanta, Georgia. And I closed on my home back in April of 2020 using the NACA program, of course. And my story is similar to Ms. Hermosa. I started back in about 2014. I heard about the NACA program from a coworker. And at that time, my husband and I, we decided to sign up for it. But at that time, we realized that we weren't ready. So we took some time off and came back to the program. And I think it was 2019. And then we went through the process, the motions, and we actually purchased a new construction home. So that was not what we intended on doing, but based off our realtor, she said it was possible and she made it happen. And that's what happened. So
what's one piece of advice you have for people as they're beginning the process?
To be optimistic, to be patient, and to just not always expect the worst, because I think that people hear so many horror stories about the NACA program. And I feel like they need to not pay so much attention to the horror stories, but they need to do their research to be able to determine if the NACA program is right for them before actually getting into the program. Because to be honest, I don't think that is for everyone, but it's definitely a good program. You just have to be very optimistic and patient about the process because it could take time. It could take a long time you make the process what you make it. So if you want to go in with open arms to receiving the knowledge and the information from the mortgage counselor and working with them, then you get the most out of the program, because that's what happened to my husband and I.
Yeah. Kevin, you also not only work with NACA recipients, but also a Chenoa, the Chenoa program, I guess I should call it, right? Or Chenoa program.
I don't work with NACA.
Oh, you don't? I thought you did.
No,
Okay,
NACA is funded through their program, and I believe Bank of America is the one who backs it.
Okay.
So Tasha's probably the expert in here. I want you to know if the lady's not here.
Yeah. So Chenoa program, tell us a little bit about that.
So the Chenoa program is a down payment assistance program, which is set up to assist borrowers with their down payment. The particular one that we participate in is for FHA. They can do either 3.5% or 5%. Now, there's three components to the FHA side, right? There is a forgivable loan where if you qualify for the area median income for your area and you make 36 on-time payments, they will forgive that loan after 36 on-time payments. What does that mean? Pay on time. After 37 months of owning the home, that $10,000 or whatever they give you, the 3.5% is forgiven and you can move on. But you have to be in the area median income for your county. Chenoa does fund in 48 states. They do not fund in Rhode Island and New York. The 3.5%, there's another component, 3.5%, where it's given as a second. And let's say on that $14,000 that you get, it goes as a second, you pay interest on it. That is forgiven after 10 years. So it's like having a second, and you do have two mortgages. You have the regular mortgage for the 96.5% that we fund. And then you have a mortgage on interest only payments on the $14,000 or whatever the 3.5% is of your sales price. So that does help with the gap. The important part about that is that's for no income. So if you make 300 grand a year and for some reason you don't have a down payment, Chenoa doesn't care what you make. They only worry about the person on the application. So if it's just Natosha, when they applied, if it was just her and not her husband, they don't look at both household incomes. They just look at the person that's on the 1003. And the 5% works the same way, except they give you 5%. So what typically happens with the 5%, the borrower puts down 3.5% for down payment. The other 1.5% goes towards their closing cost fees.
Perfect. I mean, excuse me. I know that the United States has like a really bad history with regards to Black people, but I think these programs, you know, especially because you all are here talking about how you successfully got through it, even though it takes time and it's hard and, you know, things like that. I do admire the fact that at least we have access to these programs, and anybody, you know, if you have enough fortitude, you can live the American dream, which is owning your own home. I wanted to ask a little bit about, well, I have another financial question, then I kind of want to take people through the process of buying a home. The other financial question is about your 401k. Person may not have $10,000 cash, but maybe they have a 401k. Kevin, again, this is probably a great question for you as the mortgage broker. What are some of the rules and legalities of a person using money from there if they don't have, you know, $10,000, $20,000 saved up?
So you have most 401ks have the ability to allow the borrower to use funds for a housing event without being penalized. So if you have never purchased a home or used it for an emergency, you can use your 401k, IRA, you know, whatever type of retirement, self-directed IRA, whatever type of retirement vehicle you have the ability to use that as your down payment. If you have used it and you need to borrow the money from your 401k, let's look at it this way. If you have to borrow the money from your 401k, when you pay it back, you're paying yourself back with interest. So that's just as good of an investment as anything else. It beats going to a OneMain or World Finance trying to get a loan and paying 30% when you can get it from your 401k and pay yourself back with interest. So you do have the ability to use those. You want to make sure that when we ask for documents and you know you're using your 401k, that you provide your most recent statement for your 401k so we see how much you have in your account. If it's monthly, you receive your statement, or if it's quarterly, make sure you provide the most recent statement.
Perfect. Final question for you then, Kevin. If, you know, person doesn't have a 401k, they don't have savings, you know, is there anything else that they can do? I'm just kind of trying to exhaust options for people who may be, you know, thinking, oh my goodness, I still don't know how I'm supposed to get this money.
Yep. You see this? It's a phone. Grandmama, so you can get a gift from a family member. That's what, like, you can, you can get a gift from your grandparents, aunt and uncles, brother, sister, from your spouse, your wife, fiance. I've had people get a gift from the fiance. They're not a family member yet, but you can document that relationship. The last one I had, how we document the relationship. He happened to get his ring from K Jewelers. He had the receipt. They were on a lease together that showed that they had a close relationship, and the ring showed that they were engaged. So just having those things available to you. If you own a business, because this is a business forum, If you own a business and you want to pull your funds from the business, you just need a letter from, and you have the ability to, you need a letter from your bank saying that you own ABC Corporation and that Kevin Jefferson is the owner, and you're going to use some of your business funds for your down payment or closing costs.
Okay, perfect. So I kind of want all of you to kind of walk us through buying a house. You know, what do we do first? What do we do second? What do we do third? You know, so that people can kind of feel like they have a bit of a step by step. So any of you can jump right in now. What's the first step I think that you would suggest people do?
So in the perfect world, it would be to talk to a mortgage lender. However, it's typically in reverse. They're probably seen a house on 123 Main Street that Honey has listed. And they're going to say, hey, Miss Abrams, can I come take a look at the house? She's going to say, sure. Do you have a pre-approval? They're going to say yes or no. If it's no, she's going to say no, because we need to make sure that you have the ability to purchase this home. So the first thing you would probably want to do is reach out to a lender. If you don't have one, reach out to a realtor and they can advise you on a lender that they trust.
Anybody else? What do you all think the first step is or should be?
Going through NACA is a little bit different. So, you know, traditionally, you know, when I was looking into going into purchasing a home, my first step was going to be to, you know, speak to a realtor. But going through the NACA program, the first step will be to attend one of their workshops so that you can get all of the information that you need to figure out if the NACA program is something that would work for you. And then you would work with your NACA counselor to kind of like get all of your documents and stuff in order that you would need to get qualified. After you get qualified, you know, you'd meet with your real estate agent, and then you would start looking for a home. Once you find a home, offer submitted, and then you go through the closing, you know, procedures with NACA. Of course, you're going to do your like homeowners inspection and those sorts of things. And then, you know, just go through the process of closing. In certain states, you need an attorney. I'm from New York, so in New York, you need an attorney for closing. So of course, NACA also helps you with that as well. So they do have their own lists of attorneys that you can choose to retain, or you can retain your own attorney, bring your own attorney with you if you would like, you know, and then just go through all of your closing procedures. Definitely recommend to do your research, you know, before selecting an attorney, and also before selecting your realtor. You want to make sure that you're selecting a realtor that's going to have your best interest in mind, and also one that understands what exactly it is you're looking for, because then you'd be in a better position. You also want to have, you know, that good working relationship with your realtor, because once you guys have that good connection, they are able to kind of like help you along in the process a lot more fluid.
Natosha, I'm actually going to toss it over to you.
Okay.
What's the process from your
So I would say if you're interested or thinking about buying a home, purchasing a home, I would first, like I always say, do your research just to see if the NACA program is a better program for you. Because I have heard about the Chenoa program, and there's also another program that I've heard about, which is the Georgia Dream. So there's several other programs out there for first-time home buyers that offers different grants and different monies that you can get approved for. But with NACA, I would say just make sure that you have some money saved up already, because they do have a good program where you can buy your interest rate down. And that'll help you be able to purchase more of a home. So if they only approve you for like $150, and if you have, let's say, $10,000 saved up, you can bring that interest rate down so you can purchase more of a home to make your mortgage payment more affordable. So I think that using the NACA program, it takes work, but it has a lot of great benefits to it. So I think that if people just, you know, initially start off by researching the program, making sure that you have funds saved up, and then also making sure that you have the income, because of course you can't buy a home without the income. And so if you do those things, I think that purchasing a home may not be so difficult, but it's always going to be, you know, bumps in the road when you're going through that process. But I think that being patient, being organized, especially going through the NACA program, is what's going to really get you through to get qualified and closing your home.
Yeah. Tatiana, I'm going to come back to your question because I want to add something to it. But Cece has a question for the NACA ladies. What do they request during the initial meeting?
A lot. They request income, bank statements, credit card statements. They request car payments, like whatever you owe in your car. If you have any other type of loans, if you have payment arrangements that you're paying on, if you are paying on furniture bills, whatever the case is, they want to know everything because they want to make sure that when they qualify you, that they're qualifying you for an amount that you can afford, because they will never qualify you for an amount that you can't afford. So they want to know everything that you are paying on, all your income, who you pay your rent to. So let's say, for instance, if you are not paying to a specific landlord or a rental agency and you pay your mother, they want to know how much you're paying to that person, how often. They want to know everything. They want to know who's going to be on the loan. So they need to know a lot of information, but I don't think it's anything different from any other mortgage companies.
Yeah. Cece, is there something else?
I think Natosha covered pretty much everything. Your tax returns as well, W-2s, and with NACA, they also want to see like your budget, right? Like, okay, what are your spending habits like? All right, you're saving now, but you know, if we're looking at your bank statements and you're spending, you know, the majority of those savings, you know, they want to see that budget, see that you have that strict saving pattern, so that they are making sure that when they qualify you, you'll be able to keep up with those payments.
We also have a couple of questions in YouTube as well. Tandanika is asking, how much does it cost to have a realtor attorney? Cece, you had mentioned that.
In NACA, there is NACA covers your if you use a NACA realtor and a NACA attorney, they cover it. If you use your own personal attorney, I believe NACA gives you a certain amount of funds to go towards that. Don't quote me, I believe it's $2,000. But if your attorney costs more than $2,000, then you would have to pay the difference out of pocket.
Okay. Honey, I'm going to come back to you now. Since you are the realtor, walk us through the first thing that people should do and what kind of process it is to actually purchase the house.
Okay, so I would say the very first thing, just as Kevin said, is call either a real estate professional that you have a relationship with or a lender, loan officer that you have a relationship with first. Start with the people that you trust have your best interest. Start with them first, have the conversation. Hey, this is what I'm thinking about doing. How do you see me fitting into this? And listen for the feedback. And if you feel like it's time to go forward, it's time to own a home, you won't stop. You will not stop. Nothing, they'll say 5%, you'll do a figure and you'll say, oh my God. And the next thing you know, within 6 months, you'll have the money. You will do it when you're ready to do it. So after you get yourself together, call someone you trust that you know has been in the business for some time, or maybe even someone that's new into the business, depending on your personal preference, but a loan officer or a real estate agent that's in the industry that you trust, give them a call and find out what options you have. Because sometimes we talk ourselves out of buying a home and we have no idea that we're well overqualified for what we think we want. And you know what? I could have done a fourplex and rented out the other 3 units on my income. So don't let negative talk go. Let it go when you're trying to buy a house.
And then walk us through some of the other steps that we'll go through. What can we expect?
So after we've had a discussion and you have a pre-approval from a lender, the next step is we have to determine what area do you want to live in. Okay, so we have a pre-approval for, let's just say $200,000. And you tell me you want to live in a specific area and buy-in in that area is $300,000. Okay, so let's keep an eye on that area, right, for flexibility, but let's also branch out a little bit and let's do some shopping in some other areas that are around that as well. And be open to those areas. Don't just think, okay, well, that house is, in this area, in that area is whatever your friends in high school told you it was. Neighborhoods change annually, monthly. Neighborhoods change. And if you want it to change, you're gonna have to be part of it to change it. So don't isolate areas off your list if you haven't spent any time in that area. The next thing is to figure out what type of property fits your need within that location, within that area. Some people think a great thing we have in Louisville is we have a down payment assistance program that actually will allow you to buy multifamilies. That's kind of new. That's interesting. I can go from just me to now I can have 3 other tenants in this building from a down payment assistance program. I mean, that's just fascinating to me. So let's figure out what you need. If you may actually be not only able to afford a fourplex, but you might actually need that because you're looking to put money into another investment anyway. Here you go,
Mhm.
right at home. And that has its own lane as well, right? Because now you go from just owning the home and having to maintain it to now you're automatically a landlord or an Airbnb or whatever the case may be with those other 3 units. The next thing would be, don't lowball your options. So just like with a fourplex or a commercial building or a home, don't sell yourself short. Well, I know I can only afford $60,000. So, and then you talk to Kevin and Kevin's like, where'd you get that number from? Credit Karma, you know? You're 4 times that. You're okay. You're okay. So again, no negative self-talk there. I would say my very next thing would be patience, right? So you want it to close 30 to 45 days, sometimes 60 days into it. However, things happen. Things absolutely happen. So be patient getting to the closing table. And you'll find that not only will the property you want pop up in that patience, but you'll get the best rates, you'll get the best service, you'll get the best house experience overall with patience. What did I miss? After closing, savings is important. Maintenance. Now that you own it, you are responsible to maintain it. You're not calling someone else to fix this. So those habits that you gain pre-owning that house, pre-closing, not pulling out a lot of trade lines, buying a new car, getting new credit cards, getting new phones every year, the things that you might be able to attach and associate with expenses, cost that don't necessarily increase your business, make sure that you're saving and you stay on that same saving plan. You're going to have to go out here and earn more money And you're still going to have to continue to save, because that maintenance, that roof, that carpet, that you're going to want to continue to add into value into your property, because you want it to increase and grow, because it is an investment.
Yeah, I'm glad that you mentioned that. I have a bunch of random questions anybody can answer. The first is starter homes. I often hear it that a lot of people don't want to start with a starter home. And sometimes I can understand if you have kids and your kids are in a certain school district and things like that. But I want to open it up to the panel with regards to the value of a starter home and kind of working your way up as well.
I can start. First thing is, there's very few of those on the market. Like, the pricing is high. Things have changed drastically, even from when Cece is purchased 2 years ago. Starter home, I had a conversation with a young lady today. I told her, mortgage is 30 years. If you got your dream home, you still gonna move in 5 to 7 years, because something's going to change.
Mm-hmm.
I can use prime example of my wife. We purchased a home here. It was her first time purchasing. She said, "Oh, this is my forever home. We're here." We moved into this house in 2016. We've been looking at other houses since 2017. So, it's ever changing. And even if you buy a new construction home, and I'm sure Honey can attest to it, and the young ladies who purchased, even if that at that time that was the house you wanted, a month down the line you were looking to do something else to it. So you can always increase value in homes by changing things in there. Even if you build it from ground up and you gave them the plan you wanted, 6 months later when it's done, you're like, okay, we're going to change this and that already. So just be flexible in what you have, what you're going to get. And then just know that the note is 30 years. With FHA, you can sell after one. Conventional, you can sell whenever, as long as you have the equity. Just be flexible in the beginning and just work your way up, because no one starts out with the McMansion. They start out with a starter home. It could be 2-bedroom, 1 bath. You can add on to the house and make it 3-bedroom, 2 bath, or 2-bedroom, 2 bath, and just continue to build equity until you're in a position to sell that home and get to the next one. You take the equity from that house, you put it into your other house with your down payment, and you rinse and repeat until you get to where you want to be.
Another question open for the panel: credit score. Is there any credit score that's a no way? Fix your credit first, minimum credit score?
FHA 580. We do have the ability to broker it down. If it's below a 580, if it's like 579 and below, that's a 10% down payment. Doesn't make sense to me though. Use some of those funds that you were going to put down for 10% and figure out how to pay down credit cards to increase your credit score, or figure out how to establish credit so it doesn't cost you as much. 580 minimum with FHA, well, really 500 actually, with FHA with 10% down. Conventional 620. VA, I'm gonna say 600 to 620, but you can go below. They just look so more at the residual income. How much money does the borrower have left over after they pay their bills? USDA 640. And then there's a few other programs, but for the most part, 500 is the lowest you can get to. But if
that's pretty reasonable.
It is, but if you have 500 credit score and 10% down, then we need to look at that.
Okay.
Need to look at it.
Next question is, it's going to seem like I'm teeing this one up for Kevin, but a broker versus going into a bank for a mortgage. Do I walk into, I'm not going to call any names of banks. Do I walk into my bank, or is it better for me to go to a broker that has access to different programs?
So there's actually, you've got a banker, and let's say Bank of Kevin.
Mhm.
You can go into the Bank of Kevin if that's where you bank at and see if they do mortgages. You have a mortgage loan originator, which I am, which means I work specifically for one mortgage company. We fund and lend the money and underwrite and process those loans in-house. And then you have a mortgage broker. A mortgage broker is someone who takes your information and they try to find someone that they partner with that can give you the best bang for your buck or a program that fits your need. I'm going to lean towards a lender, a traditional lender, or a broker more so than a bank, because banks are typically more conservative than we are. Example, I bank at PNC. I have a relationship with the loan officer at PNC. On the same FHA loans, their minimum credit score is 620, mine's 580. They require they require 2 years of tax returns, even if you're W-2, we don't require those. So each one, they're different in what they offer. That's why there's a ton of banks, a ton of loan officers, a ton of mortgage brokers, because we all offer something different. It doesn't, and it's something I like to preach, it doesn't matter if I put every dime I ever had in the PNC. If I don't fit their criteria, they're not going to lend to me.
Doesn't matter. Yeah.
Yep, it doesn't matter. And they're typically not as creative as mortgage brokers or traditional lenders, only because they don't have to be, because their bank has different guidelines than we do.
Yeah. In other words, the banker at the bank gets their paycheck whether or not you get approved. Whereas with some of the other, brokers and things like that, you get more creative because you kill what you eat.
Yeah.
Or you eat what you kill, or whatever the phrase
yep.
is. Okay, this is a great question for Cece and Natosha. When you were starting your process, let's say you lived in an apartment, do you go month to month on the lease? Because some of purchasing a house does depend on a little bit of flexibility as well. So when the house comes, you're able to actually move in. Strategy with regards to that.
So before I closed on my home, I was living in an apartment. So I just made sure that I let the apartment complex know I was not renewing my lease. And when it came close to the time frame that the home was going to be completed, NACA would let me know, the real estate agent would let me know. That way I could give my 60-day notice that I would be vacating the apartment. So, and then I did have to do 1 month of living in the apartment past the cutoff of the lease, because it wasn't quite ready. So I just had to pay 1 additional month. And then after that, I was free to go. I didn't have to worry about renewing the lease. I just did month to month. Okay. So, yeah.
Good. Cece?
For me, it worked a little bit different. My lease was up in October. I closed in September. However, I wanted to hold on to my apartment because I live in New York City, and my old apartment is in a very good neighborhood and a really, really good price. So I wanted to hold on to my apartment. So what I ended up doing was and one of the NACA requirements is that you need to live in the home that you purchase. So I actually purchased a 3-family home. So, I decided to move into the home, and I held on to my apartment, and I just sublet the apartment, so that when I'm ready to go back there, I can. I do plan on, accelerating the payoff process for my house so that I can, move back, to, the apartment that's in, the neighborhood that I really love to be in. And also, one thing I want to say about that, like, there are no specific rules as to what is considered, you living in the apartment, right? As long as you have in the house, as long as you have a set space for you to live in, NACA's not coming to your door to say, hey, are you still living on the first floor? So that's also something that, you can keep in mind. There's no fixed, no one, just coming to inspect at a granular level about what's going on in your home. Once you purchase, you purchase. So, when I am ready to go ahead and make that move, I will make sure that I leave a space for myself in the house, and go back to my apartment.
Good. Final question is from Tatiana, and I kind of had versions of it. We're hearing about the recession. We're hearing about the shortage of housing. Is now a good time to buy? Is the question. And honey, why don't we start off with you answering that?
Okay, so is now a good time to buy? Do you need to buy? Is now your time to buy? So are you relocating? Are your neighbors driving you crazy? Are you just, have you outgrown apartment living? Like, I get phone calls from people that are like, if they put one more person on top of me that walks like they have rocks in the bottom, so where are you? Do you feel it's time to go? If it's time to go, then let's look at what ownership will cost you versus renting across the street. Why keep paying the landlord's bills? Pay yourself. So is the market high right now? Absolutely. Can it get higher? Yes. So is it time? It's up to you.
All right. Kevin, you want to respond to that?
Yes, I do. The best time to buy is the time you can qualify. And I say that because if, a lot of people are saying, well, the market crashes. Well, guess what? That's going to affect you. Not just going to affect the housing market. If you work at Chick-fil-A and the housing market crashes and somebody from Homes and Lowe's or Home Depot lose their job, they're not going to Chick-fil-A as often. Then Chick-fil-A is laying off. As a, worker in the construction field, you're not building as many houses. So then your income is lower. So the best time to qualify is when you can. We don't know when the market's going to crash, if it's going to crash. Interest rates are going up. And the problem is we are 5 million homes short.
It's a lot of homes.
Yep. Now,
A lot of homes.
People are saying, well, it crashed in 2008. You're right. But there was a surplus of homes in 2008. Now, half the people can get out of the market and we still short. So
are we including the immigrants that are expected to be coming now that COVID is?
No, we haven't. We haven't included.
So it's going to be more than 5 million is basically the point that I'm saying that they're, because the floodgates are about to open.
Yeah. So we're, not only are we short on houses, rentals are going up. So you're in a market where rental prices are going up, mortgage interest rates are going up, and housing prices are going up. So
and supply is down. Yeah.
Supply is down. So do you pay $2,100 for rent or do you pay $2,100 for a mortgage? Where do you want to be at?
That was why I bought. I bought because, within 3 years, my rent had gone up like $400 or $500 and it was like no stopping in sight. And I said, this is ridiculous. And so as Honey was saying, that was like okay, I gotta stop this. I gotta stop this. So I'm gonna go through, because we only have 2 minutes left, and have everyone say final information, where they can find you on social media, anything like that. Kevin, since your microphone is off, I'm gonna start with you.
I'll put my information in the chat. Kevin Jefferson, the People's Lender. You can find me on YouTube, Kevin Jefferson, the People's Lender. You can find me on Facebook, Kevin Jefferson Mortgage. You can also find me on Instagram at The People's Lender. Real quick, I don't want to take the whole 2 minutes. If you're an entrepreneur, you're on here, what you want to do is really the first step before you talk to myself or Honey, have the conversation with your tax preparer about how much they write off on your taxes. If you make $100,000 and you show 10, you're not going to be able to buy a house. That's before you talk to anybody.
Sure. Honey?
Speaking of tax returns, what a great time to put down some money on a house, right? Let's use those refunds for investments. and a house, it's perfect timing. It's spring. The weather is broke in most areas. Get out here, find a house.
Yeah. And what's your social media? How do people find you?
So the best way, I would say, the easiest way to contact me is through LinkedIn. So
Okay.
I'm Honey Abrams on LinkedIn.
Okay.
Inbox me.
Are you the only Honey Abrams? You're in Louisville, right?
I'm in Louisville, Kentucky.
Louisville, Kentucky. Honey Abrams, Louisville, Kentucky. That's how you find her. Cece?
Parting words to me is I would say, the time is now. Don't wait. If you qualify, go ahead and move forward. Do not move in fear. That's my, big thing. A lot of people like speculating, oh, the market is going to crash. This is going to happen. That's going to happen. If you keep thinking about those things and being fearful, you'll never be where you want to be in life. So for me, the time is now.
And where do people find you if they want to find you? Because I know you have a business as well that you talk about.
Yeah, you can find me on Instagram at Cece Hermosa, or C of All Trades, on Instagram and Facebook.
Fantastic. And Natosha?
Yeah, I would say that if you're thinking about buying a home now, go ahead and do it. If you have the funds to go ahead and purchase a home, I mean, why wait? If you are approved, you're qualified for it, go for it. I mean, you can't continue to feel like Cece said, just go for it. Don't wait for the market to crash. Do what you want right now, because I mean, sooner or later you might regret it if you don't go forward with it. So, but yeah, you can find me on YouTube. My YouTube channel is Tosha Lena, Tosha Lena, also on Instagram.
Thank you all so much for being here tonight. I'm sure that the audience learned a lot from all of you, and y'all just jump in. I know Robert Kiyosaki says that your house is not an asset. I'm sorry, for us, I think it is. It is, especially if it's paid off and we're able to leave it to our kids and grandkids. So thank you so much to all of you. Cece?
Yeah, I was just going to say one last piece here. Starting my NACA journey, I didn't think that I would be a landlord. And fast forward, year and a half later, I'm a landlord, I'm doing it. I was probably one of those people that are out there that were a little bit nervous. And then I said, you know what, I'm going to put that fear aside and I'm going to move forward and I'm going to do this. And, I was very surprised at the amount that I got approved for when I was, looking at a single family versus the amount I got approved for to purchase a 3-family. And, the amount went up significantly, almost $230,000, purchasing a multifamily. And, the rental income that I'm getting is paying my mortgage. So I'm essentially living for almost free. So
good for you.
The time is now. I will always say that.
Good for you. So happy for all of you. Thank you so much for being here tonight. And everybody, live your dreams, and we will see you next week. Take care. Bye-bye.